Hello and welcome to this episode of Quartermaster. I'm TCA Sharad Raghavan, Deputy Editor, and as always, we have with us Saurabh Mukherjea, who is the founder of Marcellus Investment Managers, and Nandita Rajhans, who's a research analyst at Marcellus. Thank you both for joining us.
Our pleasure. Thank you.
Thank you so much for having us.
So now, going on the research, the recent research that you have done, we're going to be talking about challengers in the Indian economy. And this is a new being that is being created, these new challengers that are emerging. So, but first, let's talk about who they are challenging. So let's first talk about the concentration of profits in corporate India and how that has changed over time.
Sure. So let me just get the ball rolling. Thank you for teasing out what I think is a very interesting subject in corporate life in India. So to explain the framework, right, think about the Sensex. The Sensex as it stood in July 91, when Prime Minister Narasimha Rao launched the liberalization. Out of that 30 companies in the Sensex in 91, only 5 are still in the Sensex. Right? So I think Reliance Industries, Tata Steel, Tata Power, State Bank of India, and probably one more company, right? So out of 30 companies, 25 are out of this. So this is called churn over a 30-year period. 80% of the Sensex is getting churned out. Right? Now, even as that was happening, Sharad, the concentration of profits in corporate in India was rising. So in 1991, the top 20 companies in India accounted for 15% of the nation's profits. By COVID, by 2020, that number was pushing 100%. Right? So 1991, 15, that went to 100 at COVID. Then something remarkable happened. Between 2020 and 2024, the profit concentration dropped from 100 down to 45. Smaller Indian companies had a real renaissance, real revival post-COVID, right? And in a way, this aspect is linked to the challenges point. For the first time since 91, since liberalization, we are seeing a generation of small companies come through who are being able to challenge the titans, the rulers. The rulers are the people who rule the economy. They are being challenged by 5,000 smaller companies for the first time. And it's a remarkable phenomenon. And in a way, that's what we're going to discuss on this session of Quartermaster with you.
Right. So now this to me sounds like a great thing, not just in terms from an equity point of view that you don't want the concentration to be there, for just a few, but even from a strength of the economy point of view,
yes,
it seems like a good thing, right?
Absolutely, I agree with you. And there's a lot of work that Nandita has done on this subject that countries which are able to create more competitive economies, countries which have lower cost of land, lower cost of lab capital, more competitive labor markets, competitive factor markets translate into more competitive companies, which translate into more efficient economies, more competitive at the global scale. This is the plot that India really hasn't been able to nail properly since 91. We seem to be making progress in recent years.
Okay, and there's another interesting concept. I mean, it's an older economic concept, but you've brought it to life once again, which is of creative destruction. So could you tell us a little bit more about this concept and how it applies now?
So I'll request Nandita to elaborate on this. Schumpeter is the economist and his teachings have a lot of relevance for India today.
Right. So Schumpeter came up with this concept of creative destruction, which basically means that new technology, whenever it comes into the economy, it displaces what was already pre-established. And this keeps on happening every few years when technology shifts happen. So, I mean, a prime example that is taught in any economics class is the idea about digital cameras, how they displaced Kodak. So that is a classic example of creative destruction. New technology came in and your Kodak basically went out of business just, like that with digital cameras coming in.
It was nearly
and then later on.
Right.
Exactly. And they had a near monopoly in this market. And then, in just a span of 10, 15 years, it was completely blown to smithereens. So that's the idea behind creative destruction, and we feel that Indian economy is at the cusp of a new type of creative destruction. Now, why do we say that? Because we are seeing that these newer, smaller companies are today emerging because of a few things that have happened in the economy over the last 10 years. The country got networked. As the country got networked, the access to capital, the access to information, access to markets has improved materially. Everyone today has access to all these things without doing a lot of effort, without taking a lot of effort to do that. And that's why we see a lot of small companies, cottage industries coming up, putting up their websites and trying to sell products pan India, which was I think, let's say, even 5-6 years ago, was very limited to a small geographical area. So, for example, today a person sitting in Kolhapur, a small town in Maharashtra, can sell his products all across India without putting in a lot of distribution channels or anything that technically FMCG companies have been doing or have been famous for doing. All he needs to do is put up a website, have a storehouse, and then hire a few people here and there, and he's done with his business basically. Everything else is taken care of by already established logistics partners. You have UPI, which has also helped in payments. All of these things have come together to create this whole opportunity base. And that's where we are coming from, that this creative destruction is now taking place in the Indian economy.
Right. So this the rise of the smaller companies, that's actually also a larger story to tell, right? Because uh, when COVID had happened, there were a lot of smaller companies that just got cast by the wayside, and then there are some that remained, that were efficient, were able to take advantage of this situation and kind of grow. So could you talk to us a little bit more about that?
Sure. So I think let's just paint the story in two different shapes. This is a great time of great opportunity. It's also a time of great peril. Right. So just to give you a sense of the extent of peril, if you take the government of India's corporate tax filing data, and call credit to the government, this data is easily and liberally abundant to anybody who's interested in the subject. What the government data shows is that 1.4 million companies in India registered to pay corporate taxes. But out of that, Sharad, an unbelievable 1 million file a nil tax return, implying that they're not making any money, right? This number has roughly doubled in the last decade, right? So if you assume that these are sort of sincere companies and they're generally not making money, that suggests that the core of the SME economy, there is a challenge in generating a profit in the first place, right?
Right.
And it could well be that the whole wave of GST, DBON, the formalization of India, the joining up of the national economy has proved to be too much for a whole range of small companies whose existence was predicated on tax evasion.
Right.
So you're now left with just 400,000 companies who actually make a profit. Now, if you look within that, Sharad, you find that just 17%, say roughly 60,000 companies, make a profit higher than a crore. And thankfully, these 60,000 companies are being able to grow profits at a faster rate than inflation. Right? So just to sort of summarize the story so far, out of 1.4 million companies registered in India to pay corporate taxes, a mere 60,000 actually are able to grow profits over the last 10 years at a rate faster than inflation.
Wow. So actually, like, just positive real growth.
Positive real growth. PAT growth, profit growth, faster than 5%. Keval 60,000 company, right? 60,000 out of 1.4 million have been able to attain. That's why I'm calling it a time of great peril as well. Okay?
Right.
Now let's change the lens and focus on the opportunity aspect. Right? Out of this 60,000, there are roughly 6,000 whose profits are growing at 15, 16, 17% over a decadal basis, and more like 25% in the post-COVID era. Right? 25% profit compounding in the post-COVID era. Right? So these 6,000 companies, which include both the rulers and the challengers, they are the people who are basically hoovering the entire country's profit. So again, using the government's corporate tax data, these 6,000 companies basically account for 90% plus of the nation's PAT. Right? And these companies' profits are upwards of 50 crores, upwards of 50 crores companies, roughly 6,000 of them, accounting for the lion's share, 90% plus of India's profits. These are the real big winners of the whole process of India getting India stack coming in, physical infrastructure coming through, road network trebling in 20 years, airline network pentupling in 5 years, pentupling in the last 10. Right? So airline network, road network, low-cost broadband, all of these benefits have accrued to a tiny sliver of corporate India. 6,000 companies who are absolutely rocking 25% profit compounding in the post-COVID era.
So one more thing here, actually, there's a nuance here to look at, because the government data for taxes is only for profitable companies. If you were to include the non-profitable or loss-making companies, this share would go, I reckon, even beyond 100%, because there's a lot many companies who are making even bigger losses. This is a conservative estimate if you want to put it that way.
Okay, and
right. So just to quickly finish that off. So 1.4 million companies, may say 6,000 are the stars of the show. Yeah. Right. So in economics, this is called the theory of tournaments. Right. So just to simplify the theory of tournaments, what it says is that in any competitive interplay in a free market economy, a small sliver will take away all the rewards. So, for example, in Wimbledon, the Wimbledon winner gets 50x more than the first round loser. Right? And what's happened is a generation into liberalization. The Wimbledon payoff structure is being replicated in the Indian economy. A tiny sliver, 6,000 companies are taking home all the rewards of the economy.
Okay, and now the thing is that you also pointed to several factors that are leading to this. But actually, before we get to the factors, you spoke about how these companies, these are not very small companies. I mean, they are maybe one rung below the winners or the rulers, as you call them, right? These are the smaller companies that have consolidated and they've managed to grow.
Sure. So let's take the rulers versus challenges construct. I'll put some numbers around it, and I'll request Nandita to give a case study of a challenger franchise that she's very familiar with. Right. So the top 6,000 companies, roughly, Sharad, 800 other rulers. These are giant companies, 500 crores or more PAT, familiar household names, the companies that we own in our portfolios, the companies who are discussed in the context of the stock market every day will be the rulers. These rulers are 500 crores or above PAT. They account for roughly 60% of the nation's profits, and profit growth in the last decade has been around the 15% mark, pretty healthy. Right? Then the next 5,000 companies are the challengers. Okay? So you're broadly breaking up the top 6,000 into the rulers, top 800, and then the next 5,000, the challengers. The challengers have profits between 40-50 crores at the smaller end and 500 crores at the upper end. This is where all the action in India is. This is where the rocket-fueled profit growth has happened in the last 5 years, 25% or so. And I'll request Nandita to give a case study because it will help you contextualize what's happened, and then we'll get into the reasons, the broader reasons. But a case study will help the audience frame the challenger more vividly.
No, absolutely. I love your case studies. They actually do provide a lot of context and a lot of color to what you're explaining. So please go ahead.
Yeah. So this company, a challenger company, which is based out of Mumbai, actually, in a semi-industrial suburb of Andheri, is actually emblematic of the changes that we just talked about. So it started in 2018 with a paid capital of around rupees 8 crore or $1 million in today's terms, and it was focused on providing portfolio management services. It was founded in 2018, and it had its work cut out for itself because there are around 400 companies which are operating in this industry, and it takes nearly decades to get a profitable and sustainable business up and running in this industry. Cut to 2024, as of FY24, this firm has around assets under management of around 7,000 crores, which is roughly $1 billion. And a PAT of rupees 30 crores, which is a positive PAT in just 5 years of 5 and 6 years of existence, actually.
In a highly competitive industry.
Exactly. And as many of you must have guessed, this is Marcellus Investment Managers, the company that Saurabh and few of our colleagues have founded in 2018. And this is a prime example of a challenger, a company which was founded by people who were previously from the industry with basically nothing to begin with. And within a span of 5 to 6 years, we are where we are, around 7,000 crores of AUM that we manage. And we have also, Saurabh has also written some best-selling books. And it's a result of this tenacity that we are talking about, tenacity of the small companies who actually know their worth and are powering through and trying to, sort of unsettle the it's already established big players. This is the challenges that we are talking about.
Right. So then,
Sharad,
yeah.
If you don't mind, I'll use that specific to go to the general, right?
Okay.
So if you sort of look back at our journey, right, and I've seen hundreds of Marcelluses come through in various industries. They could be in media, they could be in various B2C products, apparel, shoes. I've seen the same happen in publishing, right? So there are broadly three underlying changes in the country which have helped this generation of challengers prosper, right? And there are many more challenges that could happen if other companies beyond these 5,000 were able to capitalize on these three things. First is, as we are doing on this webinar, the rise of almost free mobile broadband and the ubiquity of cheap but high quality mobile phones has made it far more feasible in this era than in any before to do online sales and marketing. Right? You build a brand online through books, through webinars. There are YouTubers who are specialized in this. We don't, but it's relatively easy for focused, well-run companies to build an online brand and then do the sales online. So in our case, we're in financial services. We can sign up a client online through the India stack, ID them through Aadhaar. We open their Demat account through digital media. The client sends us money or electronically. We invest their money electronically. The whole process is paperless, and there is, unless we insist on meeting the client or they insist on meeting us, there is actually very little face-to-face interaction required. We don't have to build a nation-girdling group of offices. Right?
Yeah.
So first is sales and marketing online has become very feasible due to low-cost broadband, and second is in the India stack has made it easy to KYC people, sign up people digitally, and do business without having to spend time, money on physical infrastructure. Right? The third piece is the country has financialized. Right? Attitudes have changed. Attitudes have changed to investing. No longer is real estate and gold and traditional stuff the staple of middle class India. Increasingly, middle class India, increasing the print readers, I'm sure, are saying we need to have a financial portfolio, we need to have a stock market portfolio. In many of our clients' case, we are helping them build portfolios in North America and Europe, right? Because the Indian middle class is saying, why should I just have Indian stocks? I also want the best that the West can give me, right? So changing attitudes, ready access to digital media through low-cost broadband, online fulfillment, and thus you have the creation of an economy where transaction costs are down, the ability to build sales and distribution is greater, costs of building sales and distribution are down, and companies who are capitalizing on this, whether it be for selling shoes, selling media, selling financial services, they're coming through and building the challenger franchises. If you extrapolate this, what you have is a decade ahead of us, where I think many of the challenger franchises, hopefully Marcellus included, will challenge the rulers. Right? So far, we have displaced the smaller companies who didn't have the technology wherewithal to build something like Marcellus. But the decade ahead for the Marcelluses of India is about contemplating and strategizing how to challenge the rulers.
Okay, but there was a point that Nandita made that I feel is also important, and she mentioned tenacity. And I think that is something that is important that any company that's trying to make it needs to have. You can't get discouraged by a few initial failures. You need to power through. Do you agree?
I think I agree, and I'll also point to another factor that Nandita and I are going to bring out in our forthcoming book, Behold the Leviathan, and that's that the narrative around India has changed. Right? Our parents' generation grew up in a country where death rates were higher, terrorist incidents were greater, accidents were greater. Just life and limb was at far greater risk a generation ago.
Right.
Livelihood was largely contingent on either you worked in a PSU or you ran a really tiny and very fragile SME, right? So in our parents' generation, I think morale, mood, the general narrative around the country was around fear, frustration, and just anger that life hasn't given me a fair deal. That was the 70s, 60s, 70s, and 80s, right? The angry young man era and the Salim Javed movies, which you guys have written about on the print
Yes.
this week. Right? Now, in the last generation or so, especially Nandita's generation, I'm a little older, but Nandita's generation, the attitude is let's build a life, career to sabko mil jayega, life hona chahiye, maza aana chahiye, and the risk taking appetite is at a different level altogether, right? So if I was looking at the Nandita's counterpart in the 80s, their aspiration would be कोई भारत सरकार में जॉब मिल जाए इकोनॉमिस्ट का and कोई फ्लैट मिल जाए दिल्ली में कहीं लाइफ सेट हो जाए, right? I haven't seen Nandita harbor such aspirations for a flat and a PSU job. I don't think too many people in Nandita's cohort at university have settled into cozy public sector jobs. The desire is to build exciting careers, take risk in life, take risk early in life, and if you take risk early in life, you're doing so with a mindset that the world is mine to conquer. So this shift in mindset, Sharad, I think is a story beyond Marcellus. And if the mindset is one of positivity, optimism, then tenacity is a byproduct of that.
Right. Okay. I understand. And now in the research that you've written, the two of you, there were these three factors that you mentioned. The one is that there's less tax evasion and the fall of inefficient companies. That
Yes.
I'm guessing was a post-COVID phenomenon, right?
It started with GST. GST
Okay.
makes it far, far harder to evade tax, right? Because every company in the GST world, every company that wants to get input tax credit has to report its suppliers.
Right.
And then that supplier reports his suppliers and so on and so forth. And in a network effect, GST is cascaded through the Indian economy. So unless you're sort of growing pan in your back garden and flogging it to the neighbor for a few bucks, it's probably difficult to create a viable business where you don't pay GST, right? Then came demon, obviously hard to escape the taxman if physical currency is taken out of the equation. And then you're right, COVID then ramps, right? Because you're stuck at home for 1.5 years. It's very difficult to say, I'll send you some cake or I'll sell you some stocks. Can you send me a wad of cash? Right? Who will you send it through and how will you sanitize it? So COVID then resulted in the India stack and UPI absolutely rocketing. So I think we went into COVID with barely 5% of GDP being transacted through UPI. And India came out of COVID with pushing towards 50% of GDP being transacted through UPIs. Right? So if you sort of think about Troika, GST, demon, and COVID, bang, 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 companies that were transacting in cash, life becomes much harder. They're still there. There are a few people still running around India, but it's quite evident who they are. So last weekend, I was having dinner in our neighborhood in the suburbs of Mumbai. Reasonable, local restaurant. Like a typical meal would cost a couple of thousand rupees, say, family of two. And the table next to me, the waiter came with the check, and the guy took out his wallet and started counting notes. And the whole restaurant turned around and stared at this family of two. And they were doing the mundane act of counting cash to pay the waiter, but the faces on the expressions on everybody's faces in the restaurant told a story of an ecosystem where hardly anybody uses cash anymore.
So actually, this has very positive benefits for the franchises, which are actually clever about how to use this entire finance, especially the financing part of the ecosystem. So if you think about it, working capital days, which are very important for a lot of companies, where how fast your inventories, how a turn, how fast do you get your cash for whatever products you're selling to your suppliers or the credit that you're getting. All of that, the time for a company required to get all of these things done has reduced drastically because your Bank transfers are now instantaneous. You don't even have to wait 1 or 2 days for the check to clear, which was earlier the case. Or you don't have to keep a lot of cash with you. All you need to do is just put in, a 4-digit code and, bang on, your transfer is already done. So this has reduced the working capital cycle, and as a result is also increasing the cash which companies generate to invest. So the smarter companies are generating more cash, reinvesting it into their businesses and growing their businesses. That's how the challenges are also rising.
Fantastic. And now, I guess my final question would be just looking into the near future, let's say till about 2030, just to take an arbitrary target. Do you see this being more like a zero sum game where the challengers are going to eat into what the rulers have? Or is it going to be kind of growth for both, but the challengers growing faster?
I think I'll use the analogy of our industry, right? So, although Marcellus didn't exist 6 years ago, and we now manage the best part of $1 billion, I don't think that's resulted in other PMS providers being wiped out or other mutual funds being wiped out. If anything, in the last 6 years, mutual funds are burgeoned. Hundreds of PMS providers have opened up. Indeed, the PMS industry has got together and created a formidable trade body called the Association of Portfolio Managers in India. So if you take a 4, 5, 6 year view where the economy continues to expand, it won't be a zero sum game. The cake will expand, and the challenges will take a bigger slug of the cake. The problems kick in if the economic growth rate shrinks dramatically. Then the cake becomes more stagnant in size.
Yeah.
And then if the challenges keep rising, then the plebeians who are getting squeezed out will make a lot more noise than they have done in the last decade. It's very interesting, right? Given the data from the government's corporate tax base, suggesting that the best part of out of 1.4 million companies, basically 80-90% have gone nowhere in the last decade. In spite of that, आवाज नहीं उठाई गई है because the cake has expanded,
Right.
and therefore expanding the economy at a healthy rate, right? At least 6%, ideally closer to 7.5%. That's important as the challenger's bite of the cake gets bigger and bigger.
Absolutely, I understand perfectly, and so I guess that's a great kind of setting to leave this discussion on. Hopefully, I mean it is, I feel, kind of optimistic because everybody's saying that the India growth story is on a strong footing. Our fundamentals are there. So if growth is there, then the challengers will grow, the rulers will grow, and even the plebeian companies.
Richard, if you don't mind, I'll end with a cautionary story, right?
Okay.
Because it's important to learn from other countries. So
Sure.
China also had a good thing going till roughly a decade ago, right? Somewhere around 2017, 2018, somebody convinced the people who run China that they are sort of destined to become some superpower economy. And in the last 5, 6 years, the Chinese authorities have taken a range of decisions, the sort of daft decisions which used to set back India in the 60s, 70s, and 80s, right? They've taken a hostile stance vis-a-vis the West. They have clamped down on their own people. They have cracked down on Chinese companies who have defaulted on loans, right? So this sort of narrative appears self-sustaining, and it leads to a lot of hype and hoopla, and naturally people in positions of power play it up. But it's important to understand that, and a country as vibrant and a nation, people as driven as the Chinese, have been completely derailed in the last 6, 7 years. And their challenges are wiped out. There's widespread frustration, despair, doom in the Chinese youth that their country is not giving them a fair deal. And when we meet Chinese migrants from China to the West, if we meet them in America, you can see the sadness in their faces that they thought they were going to spend their lives in China. And in the last couple of years, unfortunately, they've had to migrate to America and seek employment there, right? So it's very easy to get derailed. And it's important, therefore, that those who are listening, including those in positions of power who are listening, understand that these are fragile equilibria. We have built something powerful in the last few years in India. We need to hang tough and keep this rolling for a decade at least to make this a second world country at the very least.
Great. So that's actually a great message for everybody that things are looking pretty good right now, but no time for complacency. Keep at it. And if you do keep at it, if you keep doing the right things, then the pie gets bigger, and everybody who's taking a bite of that pie gets bigger, and everybody benefits. But on that note, thank you so much for watching, and thank you both Nandita and Saurabh for joining us.